Well, good morning, everyone. Today is February 19th. It's a Wednesday, and we've got a lot to talk about. But before you know, I want to get into something important. As most of you know by now, most of my trading, my analysis, as I do every morning, as you guys see it every morning, occurs before the market opens. That's when I develop my game plan. That's when I figure out exactly what I'm going to do. As a matter of fact, as I'm talking to you right now, I'm looking at the pre-market S&P 500. That's why my eyes keep moving back and forth. So lately, I've had the experience to work with the world's #1 pre-market trader. I'm not kidding you, the #1 pre-market trader. And he's been sending me alerts. And they've been amazing. They've been super, super accurate. Come Thursday, 1 p.m. Eastern time, we're going to do a class. I think it's going to be a one-time thing. This guy's in really high demand. It's happening 1 p.m. Eastern time, Thursday, the 20th. Don't miss out. Follow the link below. Register right now. He makes most of his money before most people wake up. You don't want to miss this. This is one of my closest friends, one of my best associates, and he's one of the most honest and credible guys in the industry. Now, we're really, really lucky to have him here. You don't want to miss out. You really, really don't want to miss out. Follow the link below. Sign up now. Don't miss out. Thursday, the 20th of February, 1 p.m. Eastern time. Don't miss out. Now, let's get into today's analysis. There's a lot of stuff going on here, as I can see right now. So, global markets are higher, even though there's more fear from the coronavirus. As a matter of fact, the cases have been falling, but there's 1,749 new infections and 136 new deaths announced on Wednesday. The main question now, Wall Street, now here, let me give you an understanding of this. Wall Street believes that it's contained, but Wall Street doesn't know yet what the impact of this is going to be on the economy. There's a good feeling, there's a strong feeling that this is going to be a major drag on the Japanese economic cycle. All right. And they're not doing all that hot to begin with. So there's a lot of fear of how this is going to impact the economy and the workforce over the next, say, 90 days. And that's something unforeseeable. And that's something that stocks are going to have to appraise once we find that out. But again, markets are a bit scared. Now, let's talk about data. We've got FOMC minutes today at 2 o'clock. Till that happens, I believe the market is going to be cool. We got housing starts today. We got PPI, Producers Price Index. These are important reports, but typically days when you have FOMC minutes, which is when the Fed tells us what they were thinking when they made the announcement to leave rates alone a little while back. Well, in this case, we kind of know what they're thinking. They're thinking the economy is stable, GDP is above 2.1%, and there's really no reason to do much at this point. So I don't think there's going to be any major surprises, but with the Fed, you never know, and we don't know how the coronavirus, the further news that's been coming out has been playing into their analysis over the last few weeks. But with that said, the stock market has been strong. We've had low volatility. We've had strong stability. All the reports are on par. So I doubt it's going to be a major surprise, but I do have to warn you, typically on days the FOMC minutes come out, the market is subdued till the minutes are released. And keep in mind, the market will still have 2 hours to trade after the release of the minutes. So there's still plenty of time for activity. Looking at the S&P 500, it looks like we're moving sideways. The divergence, the level of divergence, let me show you this. I'm going to become Picasso right now. No, just kidding. Uptrend here. Look at this. And a downtrend here. Momentum levels, all-time highs, momentum levels just can't muster what we need to move higher. And that makes sense, and that's not surprising, and let me show you why. Again, this is the NASDAQ 100. I just showed you the SPY. This is the S&P 500. This is the NASDAQ 100. And again, look at the analysis. Look at the analysis that I'm doing before the opening bell. We've still got over an hour and a half, an hour and 40 minutes before we open, but I'm already getting my key points here. Now, this is a 5-year chart of the NASDAQ 100 of stocks trading above the 200-day moving average. We have 83 stocks out of 100 trading above the 200-day moving average. That happened before, like right here one time, and then look at what happened. And it's happening again. See that? We don't usually see overbought levels on the RSI based on momentum levels, but we are right now, and we are at the highest levels that we've been in 5 years. This is a 5-year weekly chart. It's actually maybe even a month. Yeah, it's a weekly chart. So this is weekly. Every bar represents weekly. And I don't want to show you bars, although I will. But look at this. Look at these levels. Look at these levels. So we have a NASDAQ market that's grossly overbought. And keep in mind, every one of these 100 stocks is in the S&P 500. So we're having divergence. We're having grossly overbought price levels. And that's telling us the markets are fragmented. Furthermore, over the last 5 days, real estate, utilities, defensive sectors have been leading. Consumer discretionary, communication technology, information technology has been cooling off. That's a big sign that a minor dip is coming. Bond market, we rallied yesterday, but we couldn't take out the high, the swing high that we saw back in September. And I don't think we will, because the long rates, as I've mentioned many times before, the long rates are starting to assimilate interest rates going up in the future. So again, the economy, it's telling us we're going to be calm first half of the day, first 2/3 of the day. Global markets are telling us that there's a lot more worried about how not about the coronavirus itself. It seems like it's under control, but how it's going to impact the economy, and we won't know that for another 90 days. The S&P 500 is diverging. Utilities and real estate, both defensive sectors, are moving up over the last 5 days. Let's see over the last month how it's been doing. Yeah. Yet information technology and consumer discretionary is cooling off, and I'm expecting these two sectors, which trade hand in hand, to cool off even further, and for consumer staples and financial and industrial to move up with utilities and real estate, at least for the short term. The bond market, expect choppiness, expect us to possibly test the recent high at the 149.50, 150 level, and then come back down. Don't think we're going to see a lot of upside from the bond market, especially since the bond market did not react to the last 2 interest rate drops. It should have gone higher and higher and higher, and it went down. So that's important. And again, momentum levels. They're telling us that the market needs to cool off and that defensive sectors are going to lead. Now, look at all the information that you were able to glean from the market an hour and 35 minutes before the opening bell. And we can even go further. We can start looking at the intraday data. We can look at yesterday's data to determine the high, the low swings. That way we could set alerts to tell us exactly what's going on. And again, this gives us a huge advantage. It gives us an unfair advantage. And again, you're going to learn a lot about this Thursday, the 20th of February, 1 p.m. Eastern Time. Follow the link below. You don't want to miss this. Now, remember, RSVP for this. It's going to be a limited one-time event. I've got a world-class trader that's going to show you something you've never seen before at Wealth Press. This is why I've asked him to come and talk to us. You can't get this information anywhere else, folks. I mean that. You really can't get this information anywhere else. I am so stoked that I am so excited that this guy is going to come and be a guest speaker. This is going to be the coolest thing ever. I follow his trades every morning before the open, and usually they're right on target. This guy's got a win rate of like 93%. I think I've said enough. RSVP, don't miss out. Thursday, the 20th at 1 p.m. Eastern Time. You don't want to miss this. Follow the link below. Sign up now before it's too late. If you don't do it, you are going to regret it more than you know. I'm telling you. Sign up now. This is going to be huge. And I've never done a class with him before. This is the first time ever. I'm really excited about this. I hope you can tell. I'm really excited. Follow the link below. Talk soon.